Hey guys, it's Boris. Well, welcome to our technical review for June 20th through 24th. This is it. This is the big week we've been waiting for, the Brexit week. As we say in the US, this is where the rubber hits the road and volatility is very likely going to explode across pretty much all the majors, but certainly very much across the pound. So let's take a look at the charts first and just start out where we are at this point, and then we can kind of try to project at least where things could possibly go as the week progresses. So let's actually start with the euro first, which had the least amount of volatility, but did touch all of those areas we talked about last week. So 1150 was pretty decent support. 1100 definitely caught the bottom in the range of the euro. The euro still looks to be 1400 to the top side, 1100 to the bottom side. We have a little bit of news this week with Eurozone PMI flash data, but nothing really is going to move it around. Euro got a big boost when pound bounced, because in many ways this is going to be a 1-2 tandem trade. I think if Brexit goes, remember, yes, it's very, very negative for the cable, but it is also negative for Europe, because the next level of speculation is that since UK spins out, everybody else is going to try to spin out as well, including France, including Italy, including some of the other smaller countries. But really, in many ways, the most vulnerable aspect of Brexit is that it puts Italy into play. And of course, if Italy goes into play, then Euro fractures, just because it's such a huge part of the economy. All of this is random speculation. I don't actually think that Brexit is going to be a go because of the things that changed around last week. And you can see this actually in the technicals. The markets clearly don't think Brexit is a go right now, but it's a fluid situation. Nobody really knows. What you can see, though, is that, of course, they bought the 1150s here. It's turned back up. It's a sort of a risk on, or it's not even a risk on. You could call it a Brexit relief rally that we're seeing technically develop in front of our eyes. And the move here could easily take us to the 1400 on a relief basis. Beyond that, this is going to become a little bit more chunky. But remember, when you have massive sentiment changes, you could easily bust through the level. So I think 14 could get tested, and at 15 could easily get taken out just on a spike run, at which point it's probably going to meet a lot more stiffer resistance. Euro still, unless and until it breaks out the 1600s, effectively is a sell the rally type of trade. But it's not one of those kind of things where I would sell the rally right over here, simply because the possibility of a very fast, very vicious short squeeze could really take us all the way up to the 115s. But given if we get anywhere into the 1500 area, it's probably going to be an extraordinarily decent sell, because it's very likely going to fail and create a lower second high, from which point the shorts are going to have a very good posture to try to drive it back down. Now, negative scenario, we get taken out, and Brexit really becomes a reality, and there's a shock in the system. Then yes, we take out the 11s. We could very easily even take out this very, very psychologically important level of 110s in the euro. It all becomes really at this point a function of sentiment, polling, big macro event risk. None of these levels really matter anymore because of the huge amount of flows that could trigger if something goes wrong. In other words, if Brexit actually becomes a reality. So we're going to be watching, assuming things are relatively calm, we're going to be watching this 111, 114 area for basically positioning purposes. But if things get very, very volatile, then all bets are off. You have to look at possible break of the 110s and a possible break of the 115s to the upside on a big relief rally. A yen, on the other hand, was just a disaster for anybody who tried to get long, but it did prove very much our analysis from last week, where we talked about the idea that if 105.50 gets broken, all bets were off. And once it broke that 105.50 off of the relatively, benign conference from BOJ, it was basically the fact that the BOJ refused to do any more additional accommodation. The market just completely capitulated and gave in. And broke the 104s, came all the way down to 103.50s. Very, very hard to say that this 103.50 is a line in the sand. If you look sort of longer, unless this really is worthwhile looking longer for maybe 2 or 3 years back, you can see that we've now broken this 105. We've come full circle, full unwind. We broke the 105s. And if I push back on the charts here, the true support, of course, the really big support, is this 100 level. The problem with the yen, and this is something very, very important you need to be aware of, is that when we get into these levels, we are certainly very much in danger of intervention. So if you try to trade this, to the short side on a momentum basis, try to drive it all the way down to the 100s, you need to be very much aware that the BOJ could step in anytime, surprise the market, even just simply rumor the market, not even come in and intervene and squeeze the market back up. But the squeeze the market back up, generally, when you look at the intervention flows in the past, has never been a big move of more than a couple hundred points, which tends to actually get unwound most of the time. So my key point here is if you're going to trade yen, you certainly don't want to be over leveraged. This is the rule of life for all of trading this week. Trade at 1/2 to 1/3 your normal size. It'll probably be the single most important thing and the most intelligent thing you'll need to do, because the amounts of movements that could happen this week, we could have twice as much, 3 times as much movement in volatility, and if you trade regular size, you will get stopped out. You'll just get decimated in your positions. So I would trade clearly at 1/2 my size, maybe even 1/3 of my size. If you try to drive this all the way down to the 100s on a sort of a risk aversion basis, yes, this seems to be a natural support area. If we get positive news and the markets calm down and global equities sort of begin to stabilize and begin to rally, we could have on a longer term basis here, a potential of a higher double bottom, which we like to look at because we like to believe that that's a relatively decent bullish structure. And yen could become at this point a slow but steady buy. In other words, the market will naturally stop it in front of the BOJ intervention, and then we could see a little bit of a buy up. The other big event this week, of course, is Janet Yellen's testimony in front of Congress. It's the semi-annual Humphrey Hawkins testimony, which she does a testimony in front of both House and the Senate. And it'll be interesting to see if there's any more hawkish resonance from her versus what the statement was. The statement was essentially interpreted as a relatively dovish statement, and the market at this point really does not believe the Fed is going to hike rates except once in December. So to alter the expectations, to make dollar yen a buy, she's going to have to provide some sort of a hint, some sort of hope that the Fed may be considering tightening in July if the data is quite good and if Brexit goes by unaffected. In other words, if Brexit just simply passes by without UK spinning out of EU. It could be interesting. We could have a complete reversal of flows if she gives that extra oomph push in the testimony this week. It starts on Tuesday and Wednesday. So it's worthwhile to kind of consider the possibility that yen could be making a higher double bottom. But until and unless it does, in other words, it really needs to survive, in my opinion, dollar yen really needs to survive the 103 assault, which has been happening on it. This is the spike low that we created last week. If we can hold that for a day or two, there's possibility that it could be an interesting buy the dip, turn to the upside trade, but very dangerous. And again, it's one of those situations where if I'm long, I'd be out of this thing at 103. If it comes back down to 103s, it is very likely the momentum is going to take it all the way down to 100. Even under the threat of intervention from the BOJ, because the thing about this 100 level is that the market at this point, the conventional wisdom is that the BOJ is not going to intervene either verbally or physically until and unless it hits kind of 100. They are watching this like a slow motion car wreck. They're not happy about it at all, but they're really not. Their hands are tied. They just can't simply come in and step into the market. First of all, they know it'll be very ineffective, but secondly, there's a lot of international pressure for them to just hold off, even though this is very much hurting them economically at this point. So dollar yen still looks to be like a sell the rally at 105s for the time being, unless we get a complete turn in sentiment, which we can. This is I guess my whole point is that this is going to be a week of very, very wild and jarring roller coaster rides, and you need to be very flexible in your approaches. You need to really watch the levels as much and watch the news as much as anything else, because it's not going to be a kind of a situation that's going to be driven by anything but the immediate news at a moment. So if we take out the 105s on some positive sentiment, that could actually mean that we have hit the bottom, and I would be buying dips at that point. If we start breaking down towards the 103.50s, it's really a move all the way out to the 100s in a very, very negative structure as dollar yen goes by. So last but not least, of course, is our favorite story of the week, because this is going to be the star of the show, Brexit, UK. So unfortunately or fortunately, it's been a tragic week. It's been a terrible week actually last week because of course the murder of Jo Cox. But it has also, as a result of that, created a huge amount of uncertainty and non-clarity in where the situation goes. My view is that the murder of Jo Cox probably pushed public sentiment to such an extreme that it's unlikely that the Brexit vote is going to go. It created such a sense of revulsion, I think, amongst the middle of the road British public, that probably they're going to vote for a UK to stay within Brexit. But you never know. I mean, it's Britain. It's extraordinarily difficult to handicap British opinions. They tend to be incredibly independent, very, very unique in their opinions. And frankly, it's a guess. The bookies still have it high. I think the bookie odds went up to like 68% stay at this point. They were down as low as even 59% just pre the horror events of last week. And you can see the market. I mean, the market. If you're looking at technically, the market believes that Brexit is a no-go. They bought up cable. Cable actually turned. This is a very, very bullish candle. Generally, when we look at technicals, these are things that would make us very happy and very bullish on the structure. But none of this means anything if the news turns the other way, which is why I just caution you and warn you that the single most important thing here is to trade small whichever way you go, simply because the probability is so uncertain. If we do take out the lows, we go back to all of those critical levels we talked about last week. The 38.40 is the first initial level of support, and then ultimately the 35 is probably going to be the first any serious level of support. There is a possibility that we could have complete pandemonium, markets could freeze up, spreads could really widen, brokers could stop quoting. It's hard to say. It's hard to say just how much of a panic this could create if Brexit is a go. But from a technical point of view, let's just review this one more time. We looked at this last week, but let's just do this again. I think I have to go to 5 years. No, maybe even more. 10 years. Yes. And you can see the 209 spike lows, the Great Depression, Great Recession spike lows in 209, these were at 135. So this probably will be the first serious bargain hunting bid in cable should Brexit become a no-go. To the top side, the relief rally could take us certainly 45, 47, might take us to 50. It's it would be a stretch, but it's not an impossibility. So I would be prepared for really 150, 135 as the wider aspects of the range off of the resultant in Brexit moves. So we'll see how it goes. Should be quite interesting. Certainly should be very, very volatile. And let's just take a look at our levels to review where everything stands at this point. So with euro, for now, 1150, 1100 still held support. 1400 still is the resistance. Although if we get, as I said, if we get extreme moves in the euro, it could spill over towards the 1500 to the top side, where I think it would be a very decent short, or come down all the way down to 10 or 110, the big psychological level on a negative move if Brexit is a go. Dollar yen, of course, the upside right now very small, sort of 105, possibly 108 on a really strong relief rally. The downside really looks to be right now 103, 103.50, 103, but ultimately actually should really be changed to parity. That's really the really big bid. If you're trying to really bottom tick this pair and have a high degree of confidence on a sort of a value proposition, probably buying the parity is going to be the right play. Here, resistance really should be changed probably to maybe 150. I'm going to expand my levels here a little bit. And support, as I said, first comes in 40.38, and then ultimately the 135, which is the multi-year support. That's really where the cable is going to be. So wish you guys the best of luck, the best of trading this week with the majors. That's going to be a very, very challenging go. Trade small and watch the screens because it could change by the minute.